Hello everyone. This video is about corporate fraud. Corporate fraud refers to illegal activities undertaken by an individual or company that are done in a dishonest or unethical manner. Often, this kind of business fraud is designed to give an advantage to the perpetrating individual or company. Corporate fraud schemes go beyond the scope of an employee's stated position and are marked by their complexity and economic impact on the business, other employees, and outside parties. Fraud is an intentional deception to secure unfair or unlawful gain or to prevent a victim from receiving legal rights. Intentional deception in corporate sector is called corporate fraud. People have become greedy these days. It is the main reason why fraudulent activities are taking place in the economy. It is always lead the company to lose its trustworthiness. Types of corporate fraud. Most types of corporate fraud schemes fall into the following categories: asset misappropriation, vendor fraud, accounting fraud, data theft, bribery, and corruption. First one, asset misappropriation. An asset is a resource with an economic value which is owned by an individual or a company with an expectation of receiving some benefit in the future. Using these assets for personal gain or stealing these assets are considered as asset misappropriation. Asset misappropriation is a broad term that describes a vast number of employee fraud schemes. Simply, it is a theft of company assets by an employee, also known as insider fraud. Asset misappropriation scheme include: first one, check forgery. An employee forges a signature on the check made out to himself or herself or to someone else. Copying the sign of the owner and stealing the company's money is called check forgery. It is one of the most common type of fraud. It is considered as a crime, and whoever commits forgery shall be punished with imprisonment with which may extend to 2 years with fine. Inventory theft. An employee steals product from a company either by physically taking it or diverting it in some other way. Inventory refers to all the items, goods, or materials held by a business for selling in the market to earn profit. Stealing these inventory is called inventory theft. Theft of cash, most common in retail environment where cash exchanges are common. This type of fraud covers simply stealing cash, skimming, return fund, any other scheme that involves removal of hard currency. Cash is a common asset. Every company maintains some amount of cash to meet their day-to-day business activities. Stealing these cash is called cash theft. Here skimming means not registering the sales and taking the money all for themselves. Return fraud means employees making someone return the goods fraudulently for refund purpose. These are some type of asset misappropriations. Next is vendor fraud. Vendors are the suppliers of goods or services. Here vendor fraud means here under vendor fraud, the fraudsters manipulates the company's account payable and payment system for illegal personal gains. Vendor fraud can be committed by employees acting alone or in collusion with vendors. This type of fraud can also be committed by vendors on their own. Examples of vendor fraud are: first one, billing schemes. In a billing scheme, an employee generates false payment to himself or herself using the company's vendor payment system either by creating a fictitious vendor or by manipulating an account of existing vendor. Here the employees are faking the bills. They are creating a vendor and writing bills in favor of these fictitious vendor. When the payment is made, these fraudsters take the money all for themselves. Overbilling. A vendor pads invoices to charge the company for more goods than if it ships for, or to charge a higher price than agreed. This can be done in collusion with an employee or receives a kickback or by the vendor alone to defraud the company. Here the vendors are charging more than actual money for the goods they have supplied. Price fixing. This type of fraud occurs when competing vendors collude among themselves to set a minimum price or price range. This makes both vendors' price appear competitive and ensures the company pays an inflated price no matter which vendor is chosen. It is more like an agreement between the vendors. Both the vendors are coming into contract and charge higher prices to the company. Ultimately, it affects the company as they have to pay more price to the commodities, no matter which vendor they are choosing. These are the different types of vendor frauds. Next is accounting fraud. Companies are supposed to maintain records of all the transactions that is taking place in their business. Companies maintain these records in the form of accounts, and accountants are appointed to look after these accounts. Manipulating the accounts for personal gain is called accounting fraud. An employee who manipulates a company's account to cover up theft or use the company account payable and receivable to steal commits accounting fraud. Employees involved in these type of fraud are generally those in positions that have access to a company's accounts with a little or no oversight. Accounting fraud includes embezzlement, also called larceny. This is any fraud conducted by a person who controls the funds being used. It is called white collar crime. Here the embezzler attains the asset lawfully and has the right to possess them, but he uses these assets for unintended purposes. He has the right to use them, but he is using it for unintended purpose. That is called embezzlement. Personal purchase. An employee uses the company funds to pay for personal purchases and records the payment as legitimate business expenses in the accounting system. Business is separate from its owners. Personal expenses of the owner should not be recorded in the business accounts. Here, under personal purchase method, the personal expenses are recorded as business expenses, which is illegal. Double check fraud. An employee writes a check to pay an invoice, then writes a second check to himself or herself and records the disbursement in the accounting system as a payment to the same supplier. It is a similar method to billing scheme. Accountants writing two checks. They are writing the check for self and adding it to the company's vendor payments. It is double check method. These are the accounting frauds. Next is data theft. Data are important information about the company. Stealing these information stored on the corporate database, device or services is called data theft. Data theft or theft of trade secrets is a type of employee fraud that can be devastating to a company that relies on its intellectual property for its product or service. This type of theft can also compromise marketing and sales efforts and or put the company in precarious position with authorities when personally identifiable information is stolen. Data theft can include First one, trade secret theft. Theft of proprietary information to sell to a competitor. Trade secrets are the data that comprises of formulas, practices, processes, designs, instruments, patterns or compilation of information that have inherent economic value. Stealing these data is called trade secret theft. Theft of customer or contact list. A departing employee copies or downloads lists of the company contact to either sell or use. Stealing the contact list of the customer can help the person either to get a job with a competitor company, or they can sell these data to the competitors and make money. Theft of personally identifiable information. An employee steals or shares credit card number, client list or other valuable personally identifiable information to sell to the other parties. It is also similar to theft of customer contact list, but here they are sharing personal information. This can create more problems to the company. These are the data theft, bribery and corruption. Bribery means giving or receiving unearned reward to influence someone's behavior. High profile employee frauds such as bribery and kickbacks can damage much more than a company's finances. The reputational hit from a corruption accusation can deter business, affect employees' morale, and affect an organization's stock price. These fraud can include bribes. An employee pays or provides a benefit to an official to secure an advantage for the company or for the employee. Here the employee is trying to get benefit by losing the money. The reward may be promotion or other better opportunity for the company. Kickbacks. An employee receives payment or benefits from the third party in return for business advantage or for unauthorized discounts. Here the employee is receiving the money. It may be by selling some company secrets to the competitors or third parties. These are some of the bribery or corruption. These are the different types of frauds. It is about fraud. Thank you.